All right, welcome back to accounting. So, again, let's talk about business activities. What kind of business activities exist here? We have three business types of business activities, right? We have one, which is purely service based companies, okay? So, again, they provide some kind of service to you, so it requires some kind of time or some kind of labor work to be done. So again, these types of service-based companies, for example, right, could be your telephone company, right, or your cable company. A great example is going to be your accounting firm. So if you go to an accounting agency, right, you go there, you spend some time with a professional agent or professional accountant, and they basically give you advice or a consultation on what you should do about your business. That is time and labor, right? So that's considered a service. Okay. And then we are talking about merchandising activity, okay, which is merchandising companies. These type of companies, right? There's two kinds, right? Where you can be a reseller or a wholesaler. So again, the purpose of being a merchandising company is that you're going to be purchasing goods that are already made and you sell them to individuals. Okay, so a great example would be a grocery store, okay, a clothing store, right? Any types of those shops that sells products. A wholesaler, right, sells goods to individuals in large quantities. So a great example would be Costco, Winco. I believe Smart and Final is also one of them, right? They sell to individuals in bulk, large quantities, okay, wholesalers. And then last one we have here is the manufacturing companies. Manufacturing companies, again, just exactly what it says in the title, you manufacture the product. You are the ones that's creating these products. And your goal is when you take those raw materials and add a little labor to them, it becomes and creates a product which you sell to either resellers or retailers, or those wholesalers, or you can actually sell them to individuals themselves as well. But at the end of the day, the end goal here is that you are creating the product and you're selling it to other individuals who can sell those products for you as well. Okay, so again, a great example would be a car dealership, right? They are making the cars right then and there in their warehouse, and they're shipping them out to the stores to sell for them. Okay. All right. Now let's talk about talk about accounting in general. Okay. What is accounting and what does it do? Well, accounting, right, is some kind of systematic process of analyzing, recording, summarizing, sorting, reviewing, okay, and interpreting financial information. Okay, so what does that really mean? So in this case, to break it down in simple terms, what your main goal is when you see a financial transaction, or you have some financial information, what you're doing is you're going to be answering these questions, right? The who, what, where, when, why, right? But in this case, you don't need who because obviously you know who. But you're answering the what. What has happened? When did it happen? Right? Why did it happen? And how did it happen? Okay, so that's the purpose of how accounting works, is you're answering these questions, right? What has happened, right? What did you do? What did you buy? Okay, and so on and so forth. Okay, and the purpose of us collecting all this information is to ultimately create financial statements. Okay, now again, this financial information is primarily the reason why we create financial statements, is the sole purpose for our internal and our external users. So our internal users are going to be people who are within the company, right? your boss wants to be able to see what you've done with your financial statements, right? Whether to make a decision to either increase prices or make a decision to hire more people. Okay, and that's where the sales representative that works within the company can say, oh, maybe we should have a grand opening sales. That way people can come, or some kind of sale that people can come and buy our products. Or we can spend more money on advertising, so then people will know what products we actually sell. Okay, that's for your internal users. For your external users, okay, are going to be people like your bank lenders, people who are just investors in general, right? If you can take your financial information and create financial statements out of it, right? If you create a profit and loss statement, that can basically tell what your given standpoint is for that current time period, right? If you're making profits after profit after profit every single month, then an investor or a bank institute can look at your financial statements and make executive decisions whether they approve you for a loan or they want to invest money into you. So again, there is a reason why we do accounting, for the purpose of organizing our financial information by answering these questions. And when we organize it into financial statements, for the sole purpose of to provide information to our internal and external users. Okay? So then let's talk about the difference between the bookkeeper and the accountant. Okay? Now, if I were to simplify this for you, the bookkeeper, their sole purpose and job is to take those business transactions and record them in a book. Okay, so they're going to be organizing the ideas into those respective categories, and they are the ones that are going to keep track of every single business transaction on the daily. Okay, where the accountant can record those same exact transactions, but the difference here is they are the ones that's also going to be setting the rules and parameters for the bookkeeper to journalize their transactions. They're the ones that's going to be setting up the chart of accounts. They're the ones that's also going to be analyzing the data, because they are going to be the ones that are ultimately going to be creating those financial statements for those individuals. So in this case, the accountant has a more involved role than a bookkeeper does. And for this class, not only am I going to teach you how to bookkeep, I'm going to also teach you to be the accountant as well. I'm going to teach you to do both roles, because again, if you're just going to be a bookkeeper, right, you're limited to just only bookkeeping. Where if you become the accountant, your role can be expanded, right? You could become a sales manager. You can become the inventory manager. You could be the profits manager. Because with the accountant, not only are you going to be getting all the background information of all of those details of how to do those kind of jobs, right? You're going to be a lot more well-rounded, because you have more capabilities of doing more for the company than a simple bookkeeper would. Okay, so again, strictly the task for the bookkeeper is just to record business transactions, while the bookkeeper can do while the accountant can do the bookkeeper's job. They can record the transactions as well, but they would have the upper hand because they get to do more than just bookkeep. Okay? All right? So again, in this class, I'm going to teach you to become the bookkeeper as well as the accountant itself. Okay? So at the end of this program, I want you to be more than just a bookkeeper. I want you to be able to apply to any kind of job. Okay? So let's talk about the types of accounting. So this is where I was talking about that you may talk to me as an accountant, but I only know one area and one area only. I am not a tax accountant. I am not a managerial accountant. I am strictly a financial accountant. Right? So what are these areas that I'm talking about? Well, the areas are split up into 5 different categories, okay? So there are 5 different types of areas where accounting can be used in, right? You got public accounting, which is a CPA. You have to have a CPA in order to do that. Private accounting, which is going to be where we're going to be focusing our class on. And then we have government accounting, nonprofit accounting, and of course, international accounting. Okay? So let's dive into the first one. What is public accounting? You need to have a CPA license in order for you to be to be able to do public accounting. What does CPA stand for? CPA stands for Certified Public Accounting. Okay? So what does having a CPA license do? Well, since we said that it's strictly for public accounting, we are looking at managing financial information for publicly traded companies, hence corporations. You need to be a professional. And with a CPA license, it's more than just taking this class. You need to take an ethics class. You need to take a tax class. You need to take an auditing class. You need to take a whole bunch of different classes because there are 4 exams that you have to take for the certification for the CPA, right? And they cost I believe they cost $400 per or no $100 per exam. Okay, and again, you have to pass it, all right, on the first try. And once you pass the first exam, you have 6 months to take the second exam, and then 6 months after that you must take the third exam, and then 6 months after that you have to take the 4th exam. So again, it is a very long exam, but it tests you pretty much any situation that involves a public traded company. So you have to be a master of this in order for you to do public accounting. Yes, you can do some internships, but at the end of the day, those internships will gear you towards getting your CPA license. Okay? And it's very hard to get into, right? Because the whole purpose of CPAs, and why I was talking earlier about how my school is one of those schools that get those lucky few individuals who get chosen from the major 4 big accounting firms, okay? Those 4 major big accounting firms look for individuals who are those kind of individuals that can certify. And because of our connection between our school and those corporations, or those businesses, right? They are more likely to pick somebody from our school for that because of our relations. So again, it's all about building your relationship with these accounting firms because they're looking for people that they can trust, not people that they can just hire off the street. Okay? So again, it's very difficult to get into these kind of CPA types of businesses to be able to do publicly traded companies. Okay. Now, what do these publicly traded companies have, for example, positions that you can be working into? So once you get your CPA license, you are kind of categorized into 3 major categories. Okay. First one's going to be auditing. Okay. Auditing is going to be where an individual is going to be taking a look at financial statements that have already gone through and passed. And what this does is, because it's an audit, what they're doing is they're going to make sure that nothing in there seems fishy or nothing in there has been taken out for the sole purposes of taxing, right? So that's a huge one in that kind of case. Yes.
I know there's like some examples of like scandals, like for example, Enron, and I read somewhere that it was because of their accounting department.
Mm-hmm.
So, like, how does an auditor, you know, become responsible for that whole scandal issue?
We can talk about that when we get to the Sarbanes-Oxley Act in a second, so if you don't mind. But in this case, a lot of people are involved, right? Arthur Anderson, I believe, is the accounting firm who took on Enron's books, and he got paid under the table to properly rewrite those books to make it look very nice and clean, if that makes any sense. But again, I can talk about that when we get to the Sarbanes-Oxley Act. Okay? So again, auditing, right, which is what Norman was talking about, is one of those accounting where you're looking through someone's financial statements and you're basically going through what they have recorded. And basically with an audit is basically following a business and to seeing to where their transactions have gone and what are they paid and what have they done. So in this case, that is what you're doing. So basically, it's kind of like looking into the past. So that's how I understand it, is auditing is looking at everything that happened in the past. Okay? And what makes their books acceptable, right? So again, if someone has already done the work, right, and submitted to the government, there's someone that's always going to have to re-go through all of that work just to make sure that their taxes are paid properly, that they calculated the correct amount of tax, and so on and so forth. Okay, so then you can have people that can analyze those kind of transactions. You can have people who, once again, have shared opinions, because again, if you're taking a corporation, imagine how many transactions you have to go through for a span of a specific time period, right? So again, if you're looking at a billion-dollar company like Walmart that has billions stores all over the United States, and they're coming up with financial statements, this is why corporations like that hire these individuals to keep and do their bookkeeping for them. Because think about it, running one store and running how many, like 1,000 transactions per day, and imagine how many stores there are in the United States, multiplied by how many how many are still doing business and how many are not doing business and things like that. It's a lot of information, it's a lot of work. So in this case, that's what auditing does. It just basically follows a business in regards to and analyzing the way that it was been recorded and things like that. So again, looking into the past, where a second section is going to be the taxation section. So again, you're going to be looking at tax accountants for the individual corporations itself, because again, if a corporation, right, has so many profits, so many employees, so many means to be collecting all the taxes for the government, or in other senses, right, they need to be calculated how much tax that this corporation has to pay. Think about it, $1 billion corporation, right? They can be able to find loopholes and hide that tax money from the government because they don't want to pay. But that's a thing. So again, because of the massiveness of how large the company can be, tax preparation is extremely crucial, especially if everybody has to file taxes every single year, right? Depending on when each individual company wants to file their taxes based on. If they choose to do so, think about it. How many transactions do they have to go to calculate the proper tax to be able to file the taxes for the corporation? Plus, don't forget all the write-offs that they can do. So again, that's why they need to have professional people to be able to know all the tax rules in regards, because again, taxes change every year. We all know that. Taxes, tax brackets, taxes, tax rules all change every single year. So in this case, right, you need someone who's in the profession of that kind of area where they can help file taxes and know the actual tax tables that are know all the tax rules for that current year. Right? And of course, there's another one called forensic accounting, which actually, this is probably my favorite class I've took. It is the most interesting type of CPA license area that you can do. It's where you basically are going to take a look and basically become an investigator to determine whether a corporation has frauded the government or not. So this is where again you're having someone who investigates all the audit trails, all of the taxations. You're having them you're having this forensic person become an investor to see if a corporation is possibly frauding the government. So again, there are many things that you can do. So this was really interesting because when I took this class, uh, the way that the professor taught this class was you have to think that you're a criminal. What is the easiest way to incriminate a corporation, right? What are those ways that you can steal money from a company, right? Oh, well, if everybody has an account, what is one penny to someone's account? No one would see that one penny being missing. And think about how many billion accounts that are there. One penny from every billion account that there is there will give you the money that you need to fraud the company. Because think about it. What is a penny to a corporation? It's scrap change that could be swept under the rug. So that's exactly what I mean by forensic accounting is you're pretty much analyzing and you're pretty much searching for a reason for these corporations to fraud the government in any way or for individuals to fraud the corporation itself. So if you ever hear of those lawsuits that go on with those major corporations saying, "Oh, somebody breached the security system. Now everybody's account has been compromised, and we're doing our best to fix this data breach." And when someone files a lawsuit against it, all of a sudden you get some money from that lawsuit. So again, there are many, many reasons that things can happen, and there are many reasons that forensics, right, can analyze those problems and be like, well, this is the reason why that this person was frauding the corporation. Okay. All right. Any questions in regards to public accounting?
No.
Okay. So let's talk about private accounting. What is private accounting? Now, private accounting is for much more smaller types of businesses, okay? So, what do you mean by that? Well, it's definitely broken down into much more detailed positions when you are talking about private accounting. And that's where we are going to be taking a look at in our class because we need to look at the very fundamentals, the basic structure of how a business is created and how it's being run. Now, in this case, what you can do is you do get the same exact positions that you get for the public accounting, right? You still get taxation, you still got auditing, but of course, it's not as grander scale, right? It's much more minimal for these types of taxations and for auditing, right? It's for much more for smaller businesses. Now, in this case, what this class is going to be teaching you is financial accounting. What we're going to be doing here is this is where we're going to be looking at how a business becomes a business and how each business transaction affects the business, whether it's the cash flow of income or it's the out cash flow from purchasing things and buying things for the company, right? That's what we're doing as as our position in this area of accounting is we're looking at financial accounting, right? We're looking at what a traditional bookkeeper would do is to keep a good track record of all the business transactions and also preparing financial statements. Okay. Other positions that you can do. So if you were to continue on your education with accounting, the next step would be managerial accounting. What is managerial accounting? Well, managerial accounting basically analyzes financial data based on internal operations. So a great example is going to be cost accounting. So this is definitely for managerial is more for manufacturing companies, right? Where you're building your business based on how much cost it takes you to build a product. What is the budget? What is the budget for each individual cost that you're creating? And again, a green accounting, which is what are the necessary steps that you can do to do much more cleaner type of business, right? Could you save more money, save more cost if you were to do solar panels that can run and operate your machine during the day, but you use electricity during the night to continue your operations? So again, managerial accounting is another way of saying what are the costs and benefits that you can do to be able to either again raise productivity, right? But lower costs at the same time. So this one is looking at the business and or a manufacturing business and really analyzing every single penny that goes into creating a product. So that's the second step if you choose to continue your education in accounting if this is something that you want to do. Okay, you have treasury accounting, which is your basic banking accountant. So those who are the bank tellers that help do the managing up there, the ones that do those bank investments or those bank loans, those are going to be your treasury accountants. Okay. And then, of course, you have your financial planning and an analysis accounting that allows you to analyze a business based on return on investment. So again, these types of accountants, right? Their sole purpose is to analyze how much money a company is being invested in and whether the return on investment is good or not. And they also do other things like current ratios. They also do current liabilities where they're comparing how much money that they owe and how much money they're making and how much money that they're paying off the individuals that they owe. And basically analyzing not the profits, that's completely different. That's a profit manager, but analyzing the productivity and how much is it worth to invest into this company. Okay, so those are examples of private accounting. Once again, we are going to be looking at the very basic fundamentals of what a business can do, which is financial accounting. Any questions? Oh, okay, right. Next is going to be government accounting, okay? Because the government, of course, we all have different rules and regulations. Yes,
What would working for a financial services company be considered?
a financial services.
Yeah, like Citigroup or Primerica Financial Services.
That would be definitely a private company unless they specify in certain corporations. But I believe you said financial services. So if it's a small, like a small accounting firm, they're more likely to take care of smaller businesses. So again, financial services would definitely be under the category of financial accounting. So looking at helping the business in that kind of way. But there's also another part of extending for business. So again, you could be in the finance department, which is looking at the past, future, and present type of money. Okay, so that's a different branch, which is all entailed into the business. So that could be another position that can be designated for just those finance majors, okay, who have a financing degree that could be into that one because they are looking into projections. So that this is part private, but also part another department completely.
Okay, thank you.
Mm-hmm. So then we're going to talk about government accounting. So we kind of roughly touch upon this, right? There's different tax rules and things like that, but this is the government that you're dealing with, right? The government doesn't necessarily have to pay taxes because what you're dealing with is the money that the tax dollars come from. So that's what you need government accounting for, is what do you do with the tax dollars? How do you distribute them, right? So in this case, this is definitely for the types of individuals that are using the tax dollars, and what they're doing is they're going to be looking into resources, and they're going to be managing how each money is going to go to each different program, right? Each government program. So we all know that every state has their own um, government funded programs, and that's going to be where the resources manager is going to come into play to designate certain programs that are government funded. So for instance, One Stop is government funded, so they need to have individuals to be able to manage those um, those funding, because once again, when we understand government funding, we understand that once a individual does get that grant, right, they have to go through the process, and then they have to kind of see how much money that they have left overall. So again, it involves with agency funding. So again, One Stop is just one agency. What other agencies that are government funded, or other than that? So then there's other programs such as the Women's Care Shelter, I believe, is one of those agencies there. So again, the Social Security, again, that's funding all those individual. Well, that's it's federal, but there's a program under that. So again, the people who are reaping those kind of benefits for the state, for food stamps and things like that, those are state funded. Okay, and then of course, let's see. So those kind of individuals are going to be looking at government accounting, because again, they're not there to calculate the tax dollars. They are there to distribute the tax dollars in ways that needs kind of accounting to be able to budget them in certain different resources and programs. Okay. Nonprofit accounting. So we did touch upon this, right? Because again, they're not in the business of making money. So how do we look at their financial statements differently? In this case, you need one for budgeting. Okay, you also need one for fund management. Okay, so again, remember, we talked about if you're going to be receiving donations, right? What are the necessary steps that you have to do to accept that donation, right? What is the tax dollars that you're going to have to pay on that donation? Because again, it's free money, right? There's rules and regulations that you have to go through in order for you to understand what is the cost, or what is the amount of tax that you have to pay on those free dollars that you're receiving through donations and things like that. So again, that's another type of field that you have to kind of go, if you're choosing to want to go into nonprofit accounting, right? That's something that you have to keep in mind and aware of. Right? And of course, last but not least, international accounting. Now, this one is for any business that choose to do business overseas. So, for example, McDonald's, right? McDonald's is a widely known corporation that is not only in the United States, it's all over the world, right? So, those types of things is because McDonald's is a American American business, right? Since it's expanding its business overseas, it needs to have people who are aware of any foreign policies. They also need to know what the foreign currency distributions are. They need to know what regional accounting does. So again, every single thing for anything that has to do with accounting overseas is going to come into play. Now, depending on what area, so again, there are more than just the accounting principles here in the United States. There's international, which is they have the International Financial Reporting Standards, which is the IFRS. That is going to be known for the European countries on how they do their accounting. So you need to have somebody who's in the profession of that, who knows all the international reporting standards to properly report to them, right? And again, so on and so forth, right? You need to have somebody who is in the profession of that. And regional accounting, so again, in the areas that you're doing your accounting in, and the country that you're doing in, may have different, again, it's like federal versus state, right? They all have different types of requirements for filing taxes and so on and so forth, and reporting their earnings and things like that. Okay, so any questions in regards to any of the areas of accounting? So again, all of those is a lot of different areas, but again, that also gives you an opportunity to kind of think about what you want to do. Do you want to be just a strict bookkeeper and just run a small business? If not, maybe take into consideration of taking those extra classes if you are more interested in pursuing accounting, but in a specific area. Okay? Any questions?
No.
All right, so let's talk about financial reports. Okay, so financial reports, financial statements, whatever you want to call them. At the end of the day, there are 4 financial statements that you need to be aware of. Okay, number 1 is going to be your profit and loss, also known as your income statement, right? Doesn't matter which one you want to use. It's both used interchangeably. So if you understand the profit and loss, then you understand the income statement. Second one's going to be statement of owner's equity. Okay, and then the third one is going to be balance sheet, and then the fourth one's going to be statement of cash flows. Now, for the sake of this class, you don't need to know the order. You just need to know that there are 4 financial statements that are very important to those internal and external users. And I'll go ahead and break down every single one after this. But the reason why you don't need to know the order now is because it will not. You just only need to know what they are. But as we progress and go through the class, right? Once we hit to chapter 13, the order does matter. You need to know that the income statement must come first, then the statement of equity, then the balance sheet, and then the statement of cash flows. But for now, you don't need to know the order. You just need to know what they are. Okay? So let's talk about the first one, income statement, also known as your profit and loss. Other names for it could be P&L. So what is the purpose of this profit and loss or income statement? It gives you the basic information to understand how your business is doing. Is your business making a profit or is it making a loss? How do we determine that? Well, you determine that by taking all of your generated income, right? All the money that you earned from operating your business, and you're going to counter them against every single expense that you incurred in order to operate your business. So the question is, did you earn enough money compared to the amount of money that you spent? Or did you spend more money compared to the money that you earned? And that's going to determine whether you have a profit or a loss. Okay, so if you generated more money than you spend, then you got a profit. But if you spent more money than you earned, then you have a loss. Okay, pretty straightforward. The profit and loss. Okay. Second statement is going to be statement of owner's equity. Now, depending on what kind of organization you establish yourself as, there are different, but they all mean the same, okay? For a sole proprietor, you have owner's equity because you and the business are one. So you own the business, so it becomes owner's equity. If you go into a partnership, you will have statement of partner's equity, meaning what is partner number 1 doing, what is partner number 2, and what's the equity based on that. And of course, for corporations, you will have shareholders' equity, okay? Meaning you don't own it, nobody owns it, everybody owns it, right? What is the shareholders' equity? So at the end of the day, depending on what kind of business organization you are, whether you're an owner, partnership, or a corporation, at the end of the day, equity is going to be the same. Okay? What is equity? Equity is going to be your net worth of the company. What is the value of your company? What is your company worth right now? Okay? That is what equity is. So whether you're a partner, whether you're a corporation, so again, if you're looking at what the net worth of your company is, you're looking at any kind of income or any kind of money that can be considered the value of your company. So that means any investments is going to increase the value of your company. Anything that is being taken away, so whether it's owner's withdrawal, or whether if you're a corporation, your dividends lower your equity, right? Because you're distributing your profits. Other things that can also affect it is if you have net income and you decide to reinvest that money into your company, that will definitely increase your equity, the value of your company. But if you end up taking a loss, who pays for that? You're not going to pay for that. The company does. So in this case, if you have a net loss, it comes out from the net worth of the company. Okay? So that's how you have to understand it, is what is my current value of my company? All right? So again, since we are looking at a sole proprietor type of business, right? Because we need to start from square one, not square 10, okay? We need to start from the very, very, very basic. So we need to understand what the basic fundamental backbone of any type of small business does. You need to build your business before jumping into corporation. Okay? You need to understand how to start your business. And you're going to start your business as a small, either sole proprietor or partnership kind of business. So in this case, we're going to be focusing on sole proprietors. So again, we're looking at owner's equity. So then in this case, what was our original investment? Was there any capital contributions? Did I invest any more of my own money in there? Did I take money away from the company? Did I reinvest my profits into the company? That's what the statement of owner's equity does. Okay. Next is going to be your balance sheet. Okay, what does your balance sheet do? Well, straightforward, like it says in its name. You're balancing something on a scale, right? You're balancing an equation, and that equation is going to be your assets equaling your liabilities plus your equity. Okay, this right here is called your accounting equation. Okay, so what this does is it tallies up all of your assets, and it's going to compare and contrast them to all the things that your liabilities and your equity. So in this case, assets, right, is going to be anything that you own, you have property over. Liabilities is everything that you owe, whether you took a loan, right, you borrowed money from the bank, you haven't paid the government yet, right? Those are considered liabilities. And your equity, once again, is your net worth. Now, other ways that you can also see this equation too is your equity is going to equal everything that you own minus liabilities. In that case, that is also valid as well, but what you don't know is what affects equity. What are the extra things that are involved in equity? And that's where you need to go back to the fundamental accounting equation, which is your assets equaling your liabilities plus your equity. Okay? So again, in this case, what we're testing is, does everything that we own in the company equal to everything that I owe plus the value of my company? Okay? That's the balance sheet right there. And then the last statement is going to be statement of cash flows, which is going to determine this. Literally, we're looking at how much money is actually flowing into your company and how much money is flowing out from your company, right? So it's broken into 3 categories, right? Your operating activities, investing activities, and financing activities. So what the statement of cash flows does is it's actually a combination between your income statement and your balance sheet. Okay, the income statement, right? Did you earn a net profit or a net loss, right? That's the first thing that you have to address. And then you're going to break down your balance sheet accordingly based on the three categories that you have here, which is your, was it an operating activity, was it an investing, or whether it was an investing activity. And you get to see the actual flow of where your cash flowed in and where your cash flowed out. Now remember, this is actual cash, so this is taken into consideration of if you're choosing the accrual basis, which we'll talk about, where you're collecting money, but you're not collecting it, like you have your customers owe you money on an account. That's not cash that you collected. So that's what the statement of cash flows does. It's actually looking at your real dollar per dollar amount that you're earning, how much is coming into the company, and how much is actually leaving and going out from the company. Okay. All right. Any questions in regards to the 4 financial statements? Okay. So let's go ahead and talk about internal controls. Okay. Internal controls. This was set because of the Sarbanes-Oxley Act. Okay. So the Sarbanes-Oxley Act, right? Because due to Enron, because of the mismatch business that was going on with Enron, partnering up with a financial accounting firm, aka Arthur Andersen, since you had someone, the owner of Enron was controlling the business as if like doing everything that's wrong with the business and telling Arthur Andersen to do this to their company and pay them under the table. This is exactly why internal controls are set into place. So the Sarbanes-Oxley Act basically says that there needs to be some kind of system that's put into place to prevent anything such as fraud or anything that can happen in regards to financial information to be put on the actual financial reports. So in this case, right, think of internal controls as a hierarchy system, right? You have the president. Underneath the president is the CEO, the CFO, right? Underneath that one is your treasury. Then underneath them is going to be your profit, your sales, and your other managers, right? Each individual has to go through the hierarchy system. Now, how does this work? Well, for instance, right, your HR. Can the HR write themselves a check and sign it off themselves? No. Why? That's the purpose of having the internal controls having around, right? Because who needs to sign off that check? It has to go up the chain of command, make sure it gets verified by the CFO, which is the chief of the financial officer, right? They need to approve that that's the money that's going through, and then the president is going to sign it off. So again, it's another way to prevent any fraudulent charges or inaccurate accounting going on, for the reason because not only you have a system going on, right? If you heard of it, checks and balances, you need to have someone to check them off to make sure that everything goes through. So again, you're having multiple people involved into one transaction. That is internal controls. Okay, the purpose of that is to prevent any extra fraudulent charges. So again, the partner, the person who was working with Arthur Andersen, they were the ones who was writing them a check. No one in the system knew about that. The higher ups knew about that they were paying Arthur Andersen underneath the table to cook the books, as they call it, right? So again, these executive decisions, not everybody in Enron knew about it except for a few. And again, they validated it, right? They didn't even have to go through it. They said if we can make more money and start charging people higher premiums, because apparently it was them and I believe General Electric at that point. So they were already monopolizing the United States through electricity. right? So they were pulling in people with more extra money, making them pay more and more money, and people invested into their company. So eventually, after they frauded the company, and they frauded the business, then everything went down from there, and that's where the Sarbanes-Oxley Act came into play, because when we had the forensic accountants look through their cases, they saw that the owner of Enron was writing secret checks and paying off their CFOs and paying off their vice presidents some money to keep it a secret. Right? So again, it is very, very important that, and that's why the government is involved. Yes.
Can shareholders and investors recover their money?
In this case, no, unfortunately, unless they file a lawsuit against this corporation for that act, then yes, they might be able to. But again, it just really depends on the lawsuit and things like that. But in this case, they would probably be suing the individual people who took the money in the first place and kind of run off of it. You know what I mean? I believe the owner of Enron went to jail for it. But at the end of the day, is the money recoverable? In this case, like we talked about it, right? You're only liable for what you invest. So in this case, if someone invested $100,000 into that company, they might not see a penny from that unless they file a lawsuit against it. I believe it's called a class action lawsuit for that one. So is it, in this case, we wouldn't know, but for most cases, again, for people, for example, Target, right? Target gets lawsuits left and right, and sometimes some people do get money out from it. So it just depends on the lawsuit, whether they won or not. Right? Any other questions? All right, that is it for chapter 1. So let's go ahead and go over the course review. So this is what we taught in class, right? I taught you what the nature of a business is, what is accounting, okay? And then we talked about the 5 different business organizations. Now this is what I want you to get away from this chapter is I just want you to just know the basic structures of each and every single organization. I don't need you to know the advantages or the disadvantages, right? Because that's not what this whole purpose of this class is. It's just to kind of give you an idea of how you're able to determine the difference between each and every single organization, right? So in this case for sole proprietor, you know the difference because they have one person and one person only, and they are responsible for all assets and liabilities. Straightforward. While a partnership, you have to have 2 or more, and there's 2 partners that exist, a general and a limited liability. And of course, corporations, right? No one owns it, right? Because it's made up of shareholders, right? And these are the 4 characteristics. So again, I just need you to know the very basic information of what they are and not know too much details, right? The details is just for your educational purpose of learning, saying, oh, that's interesting. I didn't know about that part of a business if you plan on potentially opening up your own business. Of course, we talked about the business activities, right? There's service, manufacturing, and merchandising. Okay, we talked about the 4 financial statements, right? The income statement, statement of equity, balance sheet, and statement of cash flows. We talked about what the difference between the accountant and the bookkeeper is, okay? And we also talked about the 5 different areas of accounting. Now notice this, my review session are not into detail. So again, if you want to use this review sheets, right? And write your notes in between them, go ahead and do so. But in this case, these are just basically things that I taught in the class, right? And very basic piece of information of what they are. So again, do you need me to elaborate what a service operating activity is versus a manufacturing and a merchandising? No, not really. It's kind of self-explanatory. but for the areas of accounting, just know that there's these 5, and the area that we're focusing on is private accounting. Okay. So let's go ahead and do our chapter 1 exercises. Okay. So again, we're just going to answer a few questions here. So question number 1 says, what is the nature of a business? What is the nature of a business? Yes, you could just go ahead and answer it.
To make a profit?
To make a profit. Good. Hold on, I'm trying to kind of figure out why there is a underline when I don't want an underline. Okay, good. To make a profit. Okay, what are they doing to make a profit?
Provide goods or services.
Good, right? They're using natural resources to provide goods or services. Good. Okay. Number 2, what are the 5 different types of business organizations? No particular order.
Sole proprietor, partnerships, corporations, limited liability company, and nonprofit organizations.
Good. Okay. So, can you guys give me some examples of each business organization that you can think of off the top of your head? So, for instance, what is a good example of a sole proprietor?
Like a mom and pop shop.
Excellent, right? That's exactly what I was looking for. A mom and pop shop, right? What else?
A handyman?
A handyman, right? Someone that's doing their own individual business. Maybe they have a small business on the side. Yes, mom and pop shops. Handyman. Okay. Right. What's a good example of a partnership? It doesn't matter whether they are a regular partnership or a LLP, right? Any kind of partnership. Can you think of one?
Bed and breakfast?
Bed and breakfast. Yeah, okay, I see what you mean. Like they have the maybe. Can you give me a better example?
Like a real estate company, maybe.
Real estate's a good one. Okay, what's the one that you always see on TV?
Lawyers.
Lawyers are the perfect LLPs, right? Lawyers, right? You're always gonna see you're always gonna see, what is it? Asher and something, right? Lawyers are perfect examples because they are 2 people, individuals that always work together, and they're there to fight the law for you. So again, that's a good one.
Like right? Sam and Nash?
Yes, correct. Good one. All right. What about a corporation? I gave you a couple here. Great example of a corporation. Target. MGM. Yes, they are a big corporation. Now, here's something that you're also going to notice that you're going to see that corporations, they usually have that that little icon at the very bottom. It's like a letter C, and it's got a big circle on it. That's a corporation, right? Sometimes they even put on their title themselves, MGM Properties Incorporated, right? So that's definitely an example that you can look up if you look up online. That's what you should be looking up is what is a what are corporations that exist out there, and it will say MGM Properties Incorporated. Good. What is an example of an LLC? So this is a little difficult, but can you kind of think of one?
Sorry, could you repeat that?
LLCs, so limited liability companies. Okay, so it is a hard one, but for limited liability companies. Now, don't mistaken that all the major brands out there are corporations, because actually some of them are actually not. If you actually look it up online, usually they have the business name, right? And it will also have the tagline on their LLC, okay, for limited liability company. I'm trying to think of an example for you guys. So usually like Procter and Gamble. Okay, I believe they are an LLC. They're not an official or I think is Johnson and Johnson a company? I think so. Johnson Johnson might be a limited liability company as well. Yes.
Google is an LLC.
Wow, I did not know that. Google. Wow, Google is an LLC. Awesome. Okay. All right. What else is there? Okay, I'm sorry. Last one is nonprofit. What other nonprofit organizations that you can give me an example of?
St. Jude Children's Research.
St. Jude's, right? That's what I talked about in class, right? Make-A-Wish Foundation. Okay.
A is for autism.
What was it? A is for autism?
Yeah.
Awesome. Oh, I thought, no, that's not right. We'll skip for now. Next one. Number 4. What are the 3 types of business activities? Yes.
Is Catholic Charities nonprofit?
Catholic Charities is 100% a nonprofit.
What about Salvation Army?
Correct. Those are also 2. Catholic Church. Yes. Okay. Number 4, what are the 3 types of business activities?
Service companies, merchandising companies, and manufacturing.
Good.
companies.
Good. Right? You got someone who provides a strict service, someone who provides products, and one who makes the product. All right, number 5. What is accounting?
What, when, why, and how?
Okay, that's what accounting answers, but what is the actual definition of accounting?
collecting, recording, journaling, posting, balancing transactions.
Yes. Collecting, analyzing, sorting, organizing, all those ing words, okay? Sorting, what did I say? What did you say? Analyzing, sorting, organizing, collecting, financial data.
Posting, balancing.
Yes, posting. Yeah, all of those ing words. Yes, is correct. Okay. Make sure that number one that you want to have on there is recording. So collecting, analyzing, and recording is important. Okay. Number 6, what are the 5 areas of accounting?
Public, private, international,
2 more.
government, and nonprofit.
Excellent. Government and nonprofit. Okay. Number 7, what are the 4 financial statements? No particular order.
Income, statement of owner equity, balance sheet, and cash flow.
Okay, excuse my typing here. The answer sheets that I will post will have the actual correct spelling and everything, but statement of equity, balance sheet, and statement of cash flows. Good. All right. And last question of the day, what is the difference between the bookkeeper and the accountant?
The bookkeeper records transactions. The accountant sets the rules or parameters of the bookkeeping, but can also record transactions.
What else can they also do besides set the rules and parameters?
Set up chart of accounts, and they have a more involved role.
Good. Set up rules for bookkeeper, right? And an important one is creating financial statements. The bookkeeper cannot do that. Only the accountant can create the financial statements. Okay. Excellent job, guys. So that concludes chapter 1. Any other questions in regards to chapter 1?